वेलकम टू वी लर्न में आपका स्वागत है। सब्जेक्ट ट्रेजरी मैनेजमेंट सेशन 4 फाइनेंशियल मार्केट सिक्योरिटी मार्केट। जैसा कि आपने सेशन नंबर 3 में पढ़ा एवं सुना, जिसमें कि हमने शॉर्ट टर्म मार्केट दैट मीन्स मनी मार्केट के बारे में फुल इंफॉर्मेशन, इंस्ट्रूमेंट्स के बारे में, डिनोमिनेशन के बारे में, रिसोर्सेज के बारे में आपको विस्तृत जानकारी दी। उसी तरह से फाइनेंशियल मार्केट के अंदर जो दूसरा मार्केट होता है, जिसको हम लॉन्ग टर्म मार्केट भी कह सकते हैं, दैट इज टर्म्ड एज द सिक्योरिटीज मार्केट, जो कि हमारा 1 साल से ज़्यादा के ड्यूरेशंस को लेकर के या मेच्योरिटी पीरियड 1 साल से ज़्यादा जिसकी होती है, वो हमारा सिक्योरिटी मार्केट कहलाता है। और उस मार्केट की हम इसमें चर्चा करेंगे। टॉपिक्स कवर्ड इन दिस सेशन: कैपिटल मार्केट क्या होता है, इक्विटी मार्केट, प्राइमरी मार्केट, सेकेंडरी मार्केट एंड डेट मार्केट ऑल्सो देयर, डेट इंस्ट्रूमेंट एंड इट्स टाइप्स, डिबेंचर्स एंड बॉन्ड्स, गवर्नमेंट सिक्योरिटीज मार्केट, regulatory requirements, the function of SEBI, ADR and GDRs, foreign exchange derivatives, few derivatives but not explained, commodities and commodities future trading. And now capital market, the market where investment instrument like bonds, equity and mortgages are traded is known as the capital market. It can also be defined by the terms of time or its maturity. These instruments have more than 1 year of their maturity, and the duration of their realization is long. So this market is known as capital market. The primal role of this market is to make investment from investors who have surplus funds to the ones who are running a deficit. और जिन लोगों के पास सरप्लस फंड होता है इन्वेस्टमेंट करने के लिए, वो इस मार्केट के अंदर इन्वेस्टमेंट करते हैं। जो रिस्क अवर्स हैं, ह्यूज अमाउंट ऑफ फंड उनके पास है, लिक्विडिटी मेंटेन, सेल्फ लिक्विडिटी ईजिली जो मेंटेन कर सकते हैं, या फ्यूचर पर्सपेक्टिव में जो भरोसा रखते हैं, फ्यूचर इनकम में भरोसा रखने वाले लोग सेकेंडरी मार्केट के अंदर इन्वेस्टमेंट करेंगे। या उनकी जो नीड है वो मोर देन 1 ईयर्स होती है, कि हमें 1 साल में पैसे की ज़रूरत नहीं है, 1 साल के बाद हमें पैसे की ज़रूरत होगी या 2 साल बाद होगी, तो उस समय हम उसको ट्रेड कर सकते हैं, सेल कर सकते हैं। लेकिन उन 1 साल के अंदर फंड हमारे पास बेस्ड पड़ा रहेगा, इसलिए हम जो है कैपिटल मार्केट में इन्वेस्टमेंट कर देते हैं। तो इस तरह की थिंकिंग वाले लोग भी कैपिटल मार्केट में इन्वेस्टमेंट कर सकते हैं। देन कैपिटल मार्केट, द कैपिटल मार्केट ऑफर्स बोथ लॉन्ग टर्म एंड ओवरनाइट फंड्स। द डिफरेंट टाइप्स ऑफ फाइनेंशियल इंस्ट्रूमेंट that are traded in the capital markets are equity instrument, credit market instrument, insurance instrument, foreign exchange instruments, hybrid instrument and derivative instrument. These are various kinds of instrument. Equity instrument means equity shares that is issued by the organization from either IPOs, initial public offer, or from secondary market. Credit market instrument is also there, like debts, bonds, ये सभी इसके अंदर होते हैं। डॉलर्स, यूरो मार्केट ऑल्सो, इंश्योरेंस इंस्ट्रूमेंट, एनी काइंड ऑफ इंश्योरेंस इंस्ट्रूमेंट, देन फॉरेन एक्सचेंज इंस्ट्रूमेंट, डेरिवेटिव्स मार्केट, फॉरेन एक्सचेंज इंस्ट्रूमेंट like ADR, GDR, then hybrid multiple instrument and derivative instrument like futures, forward, swap, options, etc. Nature of capital market. The nature of capital market is brought out by the following facts. It has two segments. It deals in long-term securities. अब दो सेगमेंट कैपिटल मार्केट के कौन से हैं? एक नेशनल कैपिटल मार्केट होता है तो एक इंटरनेशनल कैपिटल मार्केट होता है. दूसरी बात क्या है? दूसरी इसकी जो खासियत है वो है इट डील्स लॉन्ग टर्म सिक्योरिटीज. लंबे समय की लंबी अवधि के लिए ये जो है इसमें सिक्योरिटी ट्रेड की जाती हैं या डील की जाती हैं. इट परफॉर्म ट्रेड ऑफ फंक्शंस and it creates depressions in business ownership. It creates dispersion in business ownership. It helps in capital formation and it helps in creating liability. So these are the natures of the capital market. Then equity market, the market in which shares are issued and traded either through exchange or over the counter markets. Share can also be issued by IPOs. Such market is also known as equity market, also known as the stock market. It is one of the most vital area of the market economy because it gives companies access to capital and investors a slice of ownership in a company with the potential to realize gain based on its future performance. This market can be split into two main sectors, primary market and secondary market. The primary market is where new issues are first offered. Any subsequent trading takes place in the secondary market. Primary market, it is that market in which shares, debentures and other securities are sold for the first time for collecting long-term capital. This market is concerned with new issues. Therefore, the primary market is also called new issue market. In this market, the flow of funds is from savers to borrowers or industries. Hence, it helps directly in the capital formation of the country. The money collected from this market is generally used by the companies to modernize the plant, machinery and buildings, for extending business and for setting up new business unit. Features of primary market, it is related with new issues. It has no particular place. It has various methods of float capital. Following are the methods of raising capital in the primary market: public issue, offer for sale, private placement, right issue, electronic initial public offer. It comes before secondary market. Secondary market, the secondary market is that market in which the buying and selling of the previously issued securities is done. The transactions of the secondary market are generally done through the medium of stock exchange. The chief purpose of the secondary market is to create liquidity in securities. If an individual has bought some security and he now wants to sell it, he can do so through the medium of stock exchange. To sell or purchase through the medium of stock exchange requires the services of the broker presently. There are 24 stock exchanges in India. Features of secondary market. Secondary market creates liquidity. It comes after primary market. It has a particular place. It encourages new investment. Debt market. The debt market is any market situation where trading debt instruments take place. Examples of debt instrument include mortgages, promissory notes, bonds, and certificates of deposits. A debt market establishes a structured environment where these types of debt can be traded with ease between interested parties. The debt market often goes by other names based on the types of debt instrument that are traded. In the event that the market deals mainly with the trading of corporate bond issues, the debt market may be known as a bond market. If mortgages and notes are the main focus of the trading, the debt market may be known as a credit market. When fixed rates are connected with the debt instrument, the market may be known as a fixed income market. So there are so many debt market available into the market positions or economy. And classification of Indian debt market: government security market, G sector market. It consists of central and state government securities. It means that loans are being taken by the central and state government. It is also the most dominant category in the India debt markets. And our bond market, it consists of financial institutions, bonds, corporate bonds, and debentures and public sector units or public sector unit bonds. These bonds are issued to meet financial requirements at a fixed cost and hence remove uncertainty in financial cost. That instrument: government security, corporate bond, certificate of deposits, and commercial paper. And now that instrument, government securities, it is the Reserve Bank of India that issues government securities or G security on behalf of the government of India. These securities have a maturity period of 1 to 30 years. G security offer fixed interest rate where interest are payable semi-annually. For shorter term, there are Treasury bill or T-bills which are issued by the RBI for 91 days, 182 days and 364 days. Corporate bond. These bonds come from PSU and private corporations and are offered for an extensive range of tenures up to 15 years. Comparing to G securities, corporate bonds carry higher risk which depend upon the corporations, the industry where the corporation is currently operating, the current market conditions and the rating of the corporation. Debt instrument: certificate of deposits, which usually offer higher return than bank term deposits, are issued in demat form. Bank can offer CDs which have maturity between 7 days and 1 year. CDs from financial institutions have maturity between 1 and 3 years. Commercial papers, there are short term securities with maturity of 7 to 365 days also. So CDs can be issued in both the formats of the market. One is money market. CD can also issue one money market which has the maturity period of 7 to 365 days. And for the secondary market or capital market, the duration is more than 1 year or between 1 to 3 years. Regulatory requirement. Regulatory requirements are the margins, license and laws applicable to a product or business firm which are imposed by a government to undergo regulatory activities. In India, the regulatory functions are performed by SEBI. SEBI, the Security and Exchange Board of India, is the regulatory for the security market in India. It was formed officially by the Government of India in 1992, with SEBI Act 1992 being passed by the Indian Parliament. The functions of SEBI: to regulate stock exchange and the securities industry and to promote their orderly functioning, to guide, educate and protect the rights and interests of individual investors, to prevent trading malpractices and achieve a balance between self-regulation by the securities industry and its statutory regulation, to regulate and develop a code of conduct and fair practices by brokers, merchant bankers with a view to make them competitive and professional. ADRs and GDRs. American Depository Receipt, ADR, a security issued by a non-US company but is traded on US stock exchange. ADRs are issued to offer investment routes that avoid the expensive and cumbersome laws that apply sometimes to non-citizens buying shares on local exchange. ADRs are listed on the NYSE, AMEX or NASDAQ. ADRs and GDRs, once again, global depository receipt similar to the ADR described above, except the GDR is usually listed on a stock exchange outside the US, such as Luxembourg or London. Dividends are usually paid in US dollar. ADRs and GDRs are shares without voting rights. The ratio of one depository receipt to the number of shares is fixed per scrip, but the quoted price may not have a strict correlation with the ratio of various kinds of currency denomination. ADRs, ADR American Depository Receipt, a negotiable certificate issued by US bank represents a specified number of shares of a foreign company. ADRs are denominated in US dollar. Advantages of ADRs: it is an easy and cost-effective way to buy shares of a foreign company. Reduces administrative cost and avoid foreign taxes on every transactions. Help companies which are listed to tap the American equity market. Any foreigner can purchase these securities. The purchaser has a theoretical right to exchange shares, non-voting rights shares for voting rights shares. GDR, a bank certificate issued in more than one country for shares in a foreign company offered for sale globally through the various bank branches. Shares trades as domestic shares. Advantage: GDR allow investor to invest in foreign companies without worrying about foreign trading practices, laws and other mandatory rules. Secondly, easier trading. Payments of dividends are in GDR currency. GDR are liquid because they are based on demand and supply, which is regulated by creating or cancelling shares. GDR issuance provides the company with visibility, more larger and diverse shareholders base, and the ability to raise more capital in international market. However, they have foreign exchange risk, that is currency of issuers is different from currency of GDR. Foreign exchange derivatives. The financial instrument like currency option, currency swap, futures, forward contract, etc. that join in future foreign exchange system are called foreign exchange derivatives. Breaking up of trade barriers has facilitated the integration of a nation's economy with the world's economy. Benefits of foreign exchange derivatives: enhances bonding among nations, make financial market more complete, and provide valuable information to investors about economic fundamentals. Provides an important function of efficient price discovery and solves risk significantly. Commodities. Commodities are defined as the products that are traded on exchange and its prices are based on the supply and demand of the product. Commodity market is an important element of financial market. The commodity market exists in two distinct forms: over the counter OTCI, exchange based market. Benefits of future commodity trading are greater flexibility, certainty, and transparency in the obtaining commodities, efficient price detection, which prevents the seasonal price variability, access to a huge potential market will increase, enhancement of robust development process, members can trade with numbers commodities and do it yourself. What are the features of capital market? Question number 2. What are the features of ADR and GDR? And that's it from session number 4. Thank you.